So, you've got the degree, but you're looking for that next level, that way of thinking that really gets you noticed on a trading desk. Well, today, that's what we're doing. We're architecting the institutional mind. This is your strategic guide to two of the most powerful credentials in finance, the CFA and the FMVA.
It's the big question, isn't it? I mean, with a million different certifications and online courses out there, what do financial institutions actually care about? What's real and what's just noise? That is exactly what we are going to break down right now.
Look, we're here to cut through all that clutter. The whole goal is to give you a clear, structured roadmap to the three pillars that truly matter: having a sharp macro intuition, practicing good quant hygiene so you don't get fooled by data, and of course, mastering the discipline of valuation.
To build these skills, our blueprint is going to rest on two main pillars. Think of them as two different but complementary paths to becoming fluent in the language of finance. And spoiler alert, they're incredibly powerful when you combine them.
And here they are, our two pillars. On one side, you've got the CFA. That's all about building a broad, strategic framework for understanding markets and risk. On the other side, there's the FMVA, which is all about deep execution, the real hands-on skills of modeling and valuation. You could say one builds the macro brain, and the other builds the valuation muscle.
Okay, so let's dive into Route A, the CFA framework. This is all about building that big picture macro brain. You know, the ability to see how all the pieces on the chessboard connect, and to speak that standardized language that institutions use.
And what's really interesting here is the structure. It's not just a random collection of topics, it's a journey. You start with a foundation in econ and quant, then you move to the building blocks of financial statement analysis, then you apply all that across different asset classes, and finally, you bring it all home with portfolio and risk management. It's a really logical progression.
So, let's talk about that foundation, the econ and quant stuff. It's not just academic theory. It's super practical. Economics teaches you to predict how central banks are going to react to news. And quant methods? That gives you what we call quant hygiene. It's basically a defense mechanism against seeing patterns in random data that aren't actually there. It stops you from just making up stories.
Next up, you've got financial statement analysis and corporate finance. Look, even if you're a big-picture macro trader, you absolutely have to know what earnings really mean. This part of the curriculum makes you so much better at telling a high-quality company from a piece of junk. And it helps you connect the dots between interest rates and how companies actually behave.
And that brings us to this key point. I mean, this quote says it all. Rates are the gravity of multi-asset. The fixed income section is honestly the central nervous system of the whole curriculum. It forces you to think beyond just yields went up or yields went down. You start to see the entire yield curve, its shape, its twists, and what that means for literally everything else.
Now we get to the capstone, the grand finale, where it all comes together. Portfolio management and risk. This is where you learn to think about the real-world stuff. Position sizing, dealing with client constraints, and, maybe most importantly, understanding what risk you truly own, especially when things go haywire and all those neat correlations you planned for just break.
And to put a finer point on it, this is about developing the PM brain. It's a total mindset shift. You're constantly asking, how big should this be? What are my limits? And if I'm wrong, what's the real damage? That's the discipline that separates the pros from the amateurs.
Okay, let's pivot. Time to talk about Route B, the FMVA discipline. If the CFA is about building that strategic macro brain, the FMVA is all about building the tactical valuation muscle. This is the get your hands dirty, practical side of the coin. The whole philosophy here is just fundamentally different. The FMVA is way less concerned with the grand theory of how markets work and much more focused on this simple, powerful mantra. Build it, link it, defend it. It's all about creating tangible, defensible work from the ground up.
And its structure is super direct. It's built on three core disciplines. First, you get your accounting foundations rock solid. Second, you learn financial modeling inside and out. And third, you apply that to practical valuation. It's a really clean path from the basics to an actionable skill.
So what do we mean by financial modeling here? It's a discipline. When you build a proper integrated three-statement model, it forces you to think about what really drives a business. What happens to the bottom line if sales grow but margins shrink? Running those scenarios and sensitivities makes your understanding of a company incredibly robust.
And all that hard work in the model feeds directly into practical valuation. This is the skill that bridges that huge gap between a good story about a company and the cold, hard numbers. Using tools like a DCF and looking at comps, you really sharpen your gut feeling. You learn to spot the difference between a genuinely cheap stock and a value trap, or to see when a stock's price has just gotten way ahead of itself.
Okay, so we've got these two really powerful paths. The obvious question now is, where do you start? So let's move from just describing them to prescribing a plan. Let's talk about how to strategically sequence your own development.
And this table lays it out pretty clearly. Your starting point really depends on your focus. If you're geared more towards a macro or multi-asset role, the CFA first path makes a ton of sense. You build that broad framework early on. But if you're all about equity research and picking stocks, starting with the FMVA gets you that hands-on valuation skill much, much faster.
Because ultimately, this is all about the tangible skills you can actually deliver. So let's wrap this up by looking at the specific, high-value things you'll be able to produce once you've gone down these paths. This is what makes you valuable.
So after going down the CFA style path, you should be able to take a big macro story, let's say about inflation, and translate it into clear implications for all different asset classes. You'll be able to explain how rates, currencies, and stocks are all connected and frame any idea within a professional portfolio and risk context.
And after mastering the FMVA style path, your deliverables are just as concrete, just different. You can build a clean, bulletproof three-statement model complete with sensitivity analysis. You can generate and actually defend a valuation range, not just a single price target. And fundamentally, your judgment on what makes a quality business versus a junky one will be so much stronger.
So there you have it. That's the blueprint for architecting an institutional mind. The CFA for that broad strategic framework, and the FMVA for that deep valuation muscle. Two pillars for professional fluency. The only question left is the one for you. Which architecture will you build first?